I want you to know that every information in this video is purposely for educational concepts and it is not a financial advice. So take note of that as you go into this video. Guys, in this video we'll be talking about technical analysis, a very important concept in crypto trading. Not just crypto trading, but also forex trading or any kind of financial market you want to trade. Technical analysis is very important because it is that tool or it is that technique that you use to identify what's likely going to happen in the market. It is that technique that helps you know whether the market is going to be going in an uptrend, or let me just say, use a layman term and say whether the market is going up or down. So technical analysis is very important, and that is why I have brought this particular topic to you today in this video. My name is Arab the Plug, and you're welcome to my channel where I talk about cryptocurrency, business, and lifestyle. If this interests you, consider subscribing to this channel, hit the like button, and click on the notification bell so that you get to see my content immediately I post them. So let's get right into the video. What is technical analysis? Technical analysis is a kind of trading discipline that helps you evaluate the cryptocurrency market or even any financial asset, whether it is crypto, stocks, or forex, and understand what the asset is likely going to do in the nearest future using trends, price action, and volume. So basically, there are some very important things you need to take cognizance of when it comes to technical analysis. The first thing is price action. The second thing is volume. Those are the two major components of technical analysis. Understanding the price action of an asset. What is the price doing? Is it moving in an uptrend or a downtrend? Is it consolidating? So all these things are things you need to understand in technical analysis, even though they are not layman terms. But as a beginner trying to learn technical analysis or trying to learn how to trade the financial market, you need to start trying to understand what all these things mean. And I'm going to talk much more about them in this video: uptrend, downtrend, consolidation, and volume, and what they mean. So technical analysis involves trying to know what is going to happen in the future in the market. And when I said future does not mean 1 year, 2 years time, because that is not the job of technical analysis. The job of technical analysis is to tell you what's likely going to happen in the market in the morning, tomorrow, or maybe next week, or within a few weeks. And that is why I used to say that in the market, in the financial market, we usually have majorly 3 types of trader. There are scalp traders, there are swing traders, and there are day traders. Who are scalp traders, or what's scalp trading? Scalp trading simply means that you are trying to scalp the market by trying to cover a very short movement in the market. And when you scalp something, you are just trying to take a tip of it. And that means that as a scalp trader, you are trying to take a trade that's going to last few seconds or few minutes. And that means that as a scalp trader, you are trying to cover a very short movement in the market. So now you could just enter a trade at 1 and exit at 1.01 or 1.02. And by that, you have tried to cover a very short movement in the market to make profit. So that is what scalp traders do. Aside scalp traders, we have day traders. And what day trading means is that you are going to get into a position, a trading position, and get out of that position with either profit or loss in less than a day. That means as a day trader, in the morning, you try to look for trading opportunities, take these opportunities, and make sure you get out of that trade in that day. So day trading could, if you are a day trader, you could get into a trade and get out within 1 hour, 2 hours, 3 hours, 4 hours, and the likes. But day trading, if you are a day trader, all your positions must be within a day. And that is what day trading means. And aside scalp trading and day trading, we have swing trading. Swing trading simply means that you are trying to capture a large movement in the market, which could take more than a day. It could be 5 days, 2 days, a week, 2 weeks, and more. So that is swing trading means. So all these techniques in trading matter, and they determine what kind of analysis you are going to do and what kind of things you are going to consider when doing your analysis. Talking about technical analysis, there are some other important things we need to talk about, which is what is the difference between fundamental analysis and technical analysis. And even though I have made a video on this channel where I talk explicitly about this difference between fundamental analysis and technical analysis, you can find a link to that video in the description below. But then I'm still going to try and chip in a little thing, which is that when it comes to technical analysis, you are looking at what is likely going to happen in the market in a short period of time. Even if you are a swing trader, you are looking at maybe 1 week, 2 weeks max. But if you are doing fundamental analysis, you are trying to understand whether an asset is undervalued or overvalued. You are trying to look at the intrinsic value of an asset, whether it is really worth its price or not, whether you are just buying a hype or not. With fundamental analysis, you are trying to look into the projects of that asset. You are trying to look into the white paper. You are trying to look into the use case. Why was this project created? What problem has it come to solve? And why would people keep buying it or not? So that is what fundamental analysis basically treats. When it comes to technical analysis, you are directly looking at, okay, what has it done in the past? What levels on your chart has it respected in the past? And what is it going to do tomorrow if you are a day trader? What is it going to do in the next few minutes as a scalp trader? And what is it going to do in the next few days or weeks as a swing trader? Also, when we are talking about technical analysis, one important thing to look at is time frame, charting on time frame. Because if you want to analyze the market, you analyze on charts, candlestick charts. And we also call them Japanese candlestick chart because the candlesticks were invented by a Japanese, and it is highly used by Japanese. So you are looking at the charts which are formed by candles. So whenever you see traders analyzing the market, you see them looking at charts. And subsequently, we are going to look at videos. We are going to create videos, contents that we will be looking at charts and analyze them on this channel. So stay tuned and make sure you subscribe. So one important thing to talk about when it comes to technical analysis is time frame, because technical analysts analyze the market on the candlestick charts, and the candlestick charts is like a chart that comprises of a lot of candles that depict price movement. So it's important to analyze based on time frame because each candle has a particular time frame that it represents. So let's say you are on a 5-minute chart. Each candle on a 5-minute chart represents the movement of the price within 5 minutes. If you are on a 4-hour chart or a 4-hour time frame, each candle on a 4-hour time frame represents the movement of the price within 4 hours. So time frame is very important in technical analysis, and you have to understand this concept because it works hand in hand with the kind of trader you are, whether you are a swing trader, a scalp trader, or a day trader. So let's, for example, swing traders analyze the market on higher time frames. And when we talk of higher time frames, we are talking about the monthly time frame, the weekly time frame, the daily time frame, and even sometimes the 4-hour time frame, because for day traders regard the 4-hour time frame as a higher time frame. So for day traders, they usually analyze on the 4-hour or maybe the 1 hour or 2 hours, depending on the strategy, and maybe the 15 minutes. Why scalp traders use 15 minutes, 5 minutes, 1 minute, and the like. So time frame is very important because it usually tells you on your chart what has been happening on the charts or what has been happening to the price within a specific time. So it's very important. Another important concept when it comes to technical analysis is the candlestick, because candlesticks are the representation, the graphical representation of price movement on your chart. So candlesticks talk about what the price has been doing within a time frame. So all these things work hand in hand, candlesticks and time frame. Whenever you have a chart you want to analyze, there must be a time frame attached to the chart, because the chart comprises of candlesticks and you measure candlestick in relation to the time frame. Another important concept to understand or to note when you are talking about technical analysis is the candlestick patterns. All these candlesticks that form on your chart, whenever they form and they join together, they form some patterns that identify or they give you signal whether price is going to go up in a bullish direction or the price is going to go down in a bearish direction. So in the financial market, when price is bullish, it means that the price is going up, and when it is bearish, it means that the price is going down. So candlestick patterns are the formation of candlesticks to form some patterns that give you a signal of what the price is likely going to do next. For example, we have the bullish engulfing candle. We have the engulfing candle, which is divided into two: the bullish engulfing candle and the bearish engulfing candle. The bullish engulfing candle is the combination of two candlesticks that form a pattern called the engulfing pattern. And when we have a bullish engulfing pattern, it signifies that the price is about to go bullish. And when we have the bearish engulfing pattern, it signifies that the price is about to go bearish. We are going to talk more about chart patterns and price patterns or candlestick patterns later in subsequent videos, so stay tuned. One of the most important things that you have to note when it comes to technical analysis is technical indicators. Technical indicators are some indicators that are formed based on the price movement, and they are used to analyze the market. So indicators are basically not the most important thing, but they are important because they are used as confirmation to confirm whatever you have established through price action. We have a lot of indicators in the financial market. We have the RSI indicator, we have the moving average, we have the MACD. We have a lot of indicators. So you have to try to study them and know which one works best for you. But I promise you that on this channel, we are going to talk much more about indicators in later videos. So stay tuned and stick around. So another important thing that you need to know when it comes to technical analysis is the volume, the price volume. The volume is amount of prayer available in the market, whether it is a bullish market or a bearish market. So the volume of the market, which signifies how much money buyers or sellers are pushing in the market, helps you analyze the market and gives you a clue of what is likely going to happen later in the market. Let's say, for example, the price is going bullish in a bullish direction, which means the price is going up and the volume is low, and that price is going towards a resistance level on your chart. So there is let's say 99% probability that price is going to reverse at that resistance level. So volume gives you a clue of how buyers and sellers are pushing the market towards a certain direction. Volume gives you that kind of clue. So volume is a part of technical analysis that helps you determine what you are going to do in the market in confluence with some other price action strategies that you have established. This is where I'll be stopping for this video, and I'll be making subsequent videos about technical analysis, about some concepts about technical analysis, indicators, price action, and lots more. So stay tuned and make sure you like this video, subscribe to my channel, and see you in the next video.